Hello, my name is Faisal Khan. I got a question recently that can you explain very simply what a stable coin is? I did do a video on it earlier. It's a series, you'll have to go watch it over here, that explains it in detail what it is. But in a compact form, think of a stable coin as someone issuing a check. I don't have a check with me, I guess hardly anyone uses checks now. But let's say, you have $100 and I write you a check. I don't put the name on it, right? So there's a place where I can put my name, but I have a signature here. I can put your name here, and the check, it's issued on some bank. And I give it to you, and you take this check, and you know it's good for $100. Well, that's the thing. You can call up the bank and you say, hey, Faisal gave me a check for $100. Is it good? They say, yep, it's good. Okay, cool. You go somewhere else and you want to buy a phone, it's for $100, and you give them the check. They say, well, we don't accept checks. You say, yeah, but you see, it's not signed, so you can put your name on it. So they call the bank and they say, hey, is this good? They say, yep, this is good. So now you buy the phone, they've got the check. The phone guy goes somewhere else, maybe he needs spectacles, etc. He gives it to the optician, and the optician says, yep, this is good. They call the bank says, yep, this is good. So you see what's traveling is when I initially give someone the check, they use this everywhere else. So rather than taking the money out, putting it back in, taking the money out, putting it back in, taking the money out, putting it back in, we are simply circulating an instrument, an IOU. And this is exactly what it is. It's an IOU, right? And there's a consensus amongst all those who are accepting it that there is money behind this IOU. And how do they do that? Well, they go call up the bank, etc. in this case, and say, hey, listen, I have got this check. At this point in time, is there $100 that can back it up if I were to encash it? And they will say, yes, there is. Now, that's not necessarily true. I could write a check for $10,000 and, after 10 minutes, my account could be wiped empty. And when you present this thing, there'd be no money. Well, stable coins are no different. Stable coins are actually in some institution that you have no access to, by the way. It's just basically trust. And you're assuming that that institution has one-to-one pairing on all the digital assets that they have issued. So in some cases, they do leveraging. They'll say, okay, you know what? In reality, we don't really need $100 million. We'll just put $50 million and issue $100 million worth of coins. So you know that in the event, if there's a run on this setup, if everyone went to claim, only 50 million would get. So you get 50% of your money, not the full amount. So you have to be careful on these things. Stable coins can take many forms. There's a lot of argument, are they really stable, etc., because they're tied to the dollar or they're tied to a pair of currencies or a couple of currencies, etc. Well, if let's say you have the dollar, is the dollar stable? No, of course it's fluctuating. Fluctuating against what? Well, fluctuating against other pairs, right? But the dollar itself is decreasing because there's inflation, there's whatever, all those cost of living adjustments, etc., that are not offered to you in this case. But basically, you have an IOU. You take this IOU and you can run it. And that is essentially what a stable coin is. Someone is issuing you a digital version of this IOU and saying, hey, you can trade with it. And then there is, like I said, a consensus amongst the players, amongst the participants. And these participants are particularly going to be accepting this instrument because they believe in it. They know that should it come to that they want to encash out or cash it in as the chips are cashed in, that they will indeed get their money. And the hope of the issuer is that they don't really need to cash out. Someone else will just take it from them, and this will be circulating in the ecosystem. And with every circulation, there'll be a little bit of a surcharge in this buying and selling or trading of this IOU, and that is how they make money, etc. So this is basically, in a very nutshell, in a very crude manner, it's a very heuristic way of explaining of what a stable coin is. Give me your thoughts below in the comment section. As always, if you have a business inquiry, there's a contact form in the description below. There's also a business WhatsApp. Till next time, this is Faisal Khan signing off.